As a solopreneur, understanding sales tax is crucial to ensure compliance and avoid penalties. Here are some key points. 1. Basics of sales tax. Sales tax is a tax imposed by city, county, and state governments on the sale of goods and certain services. The tax is usually a percentage of the sales price, and it's collected by the seller at the point of sale. 2. Sales tax nexus. You're required to collect sales tax in states where you have nexus, and that means you have a significant presence. Traditionally, this meant having a physical presence like a store, an office, a warehouse. However, many states now have economic nexus laws. You may have heard of the case South Dakota versus Wayfair. So now these laws require you to collect sales tax if you have a certain amount of economic activity, so that's sales revenue or transaction volume in a state, even if you don't have a physical presence. So this could be $200,000 of sales into a state within a 12-month period. Each state has varying laws surrounding this. 3. Product and service taxability. Not all products and services are taxable. So what's taxable can vary by state and locality. You'll need to check the rules in the places where you do business. This is true for both products and services, and some states have special tax rates for specific types of products and services. So 4, let's talk about exemptions. Some sales may be exempt from sales tax, such as sales to a nonprofit organization or a religious organization, and you're going to need to obtain a tax exemption certificate from the buyer showing why you didn't collect sales tax from them. Additionally, other items like food for home consumption and prescription drugs may be exempt from tax under state law as well, but you generally don't need an exemption certificate for those. They're just exempt to the buyer. 5. Sales tax rates vary by location. If you sell to customers in multiple locations, you may need to apply the correct rate for each location. So some states are origin-based states. That means the sales tax is calculated at the business address. Some are, most or a lot of them are destination-based states. So it's important to know the sales tax rules for all states in which you're conducting business so you know the correct sales tax rate to apply to your transactions. So 6, let's talk about registration. Before you can even think about collecting sales tax, you need to register for a sales tax permit with each state's Department of Revenue or equivalent. So Department of Treasury, the Tax Commission, whatever they call it. 7, collection and remittance. You're responsible for collecting the correct amount of sales tax at the point of sale and remitting it to the appropriate tax authorities. Then number 8 is reporting and filing. So typically you're going to file your regular sales tax returns within each state that you're registered. The return is going to summarize your sales and your sales tax collections. The frequency of filing varies from monthly to annually. It depends on the state you're in and the volume of your sales. And the state is going to tell you what your filing frequency will be. You do not choose it. The local will tell you. They will tell you your filing frequency. 9, online sales. If you sell goods online, you may need to collect sales tax from customers in other states. So it depends on the laws. We talked about the economic nexus law. Some online platforms will automatically collect it and remit it for you on behalf of them, but you shouldn't assume that this is the case. So be smart and know what's happening in each one of these online platforms that you're selling through. Are they collecting the sales tax and are they remitting it on your behalf? Number 10, sales tax automation software. Sales tax can get complicated quickly, especially if you sell to customers in multiple states. So this software can help you calculate, collect, and remit the correct amount of sales tax, as well as maybe prepare your sales tax return even. QuickBooks Online includes automated sales tax calculations in their invoices and sales receipts. Makes it easy for your business to calculate the correct sales tax rate across a variety of products and services in the United States and even globally. And because sales tax laws are complex and they change frequently, it's a good idea to consult with a tax professional or refer to your state and local government resources.